So let me give you a metaphor that'll make this really easy to understand the market. And let's use the kitchen sink, okay? Because the kitchen sink is a really good example. Let me show you another chart. This is the chart of current housing inventory. Now, back in 2015, when we were in a normal market, not a bad market, just a normal market. I mean, we all remember 2015. It wasn't that long ago. There was a presidential campaign going on, and a year later, Trump actually won the election. And we all kind of know what happened just to remember that time. Okay. But 2015 was certainly a vibrant, healthy market. We were selling lots of properties back then. I mean, business was quite good. There were about 1.2 million homes for sale in the United States back then. So inventory today is substantially lower than it was back then. Now, when inventory got really low during the COVID era, it got down to about 243,000 at the lowest point. So inventory is definitely higher than it was back then, but compared to what is the question? I mean, that was like a complete anomaly. Okay, that isn't even a comparison. So here's the typical headline in the sensationalist, soundbite-driven, non-intellectual news media. Inventory has increased. I mean, inventory is up by almost 200,000 more homes than it was before. Okay, so what? But what they didn't tell you is that it's still less than half of what it is in a healthy market, a normal market, right? But you can spin a headline any way you want, right? But let's look at the kitchen sink, because the kitchen sink is a good way to understand it. So inventory now is, maybe what most people would consider about 40% of normal. Okay, approximately. Okay, so with the kitchen sink, you have the faucet, and out of the faucet comes new inventory, houses coming onto the market, new listings. Okay, that's the new water coming into the sink. And in the sink, you have existing inventory, right? You have the sink filled about 40% of the way. It's not filled to the top. There's not very much inventory. It's filled up about 40% water in the sink. And then you have the drain. And the drain represents buyers, the absorption rate, properties being sold and taken off the market because they've sold. So the drain right now is a little bit plugged up. It's, only about 60% open. Well, a little less than that, maybe 55%. It's about half open. Okay. So, if we assume that sales activity nationally is down by about 30%, give or take, it's actually not quite even that bad, but let's just go with 30%. So the drain is 70% open and 30% plugged. There's 40% of the water in the sink, and there is a trickle of water coming out of the faucet, new inventory. Okay. Why isn't there more inventory? Well, it's because of the prior chart. These people simply don't want to turn on the faucet. They don't want to sell their houses because they've got those super cheap mortgages. So they're just holding them. And think of how long, I have long said that this is the poison pill the Federal Reserve put into the real estate market. Now, poison pill in terms of if you're a home buyer, it's a poison pill. But if you're a home owner or an investor, it's actually quite good for you, because these people have 28 to 29 years left on these super cheap mortgages. And this will constrain inventory for literally decades to come. These people will not be motivated to sell until they can get a mortgage for less, the same or less than the current mortgage they have. That's always going to be their analysis. So the sink is unlikely to fill up. And even with sales volume being down, inventory is still extremely scarce. One more thing, and maybe we'll wrap it up with this. For the first time ever, possibly, at least the first time in my multi-decade career, we have this dichotomy in the market. On one side, we have new homes and builders, and on the other side, we have resale homes and homeowners. When we looked at the most important chart in real estate, we were looking at homeowners, not builders. Because builders don't have that cheap long-term debt on their properties. And during the COVID era, when demand was so high, they started to try and ramp up their machine and build more properties. And some of those properties are starting to hit the market, and more will continue to hit the market. And you will see, well, we're already seeing it, but a good amount of builder motivation and builder incentives where builders want to unload inventory. And so some people say, well, that's going to crash the market. No, it's not. Okay. Because builders, first of all, don't have that much inventory in comparison with the overall real estate market. I mean, the overall real estate market is about 140 million homes. Builders, like what they're going to deliver over the next year or two in terms of new inventory is like a drop in the bucket. It's a very small amount. But they will be motivated to sell those properties because they don't have long-term debt. And some of them are being built as what's called build for rent. And that number actually right now has exceeded the number of build for sale. And I think that's also a new first, okay? Because institutional investors want to buy these properties directly from the builders because they have really strong belief in the long-term buy and hold rental market, okay? So you're going to see some softening around the edges of the new home builder inventory. But here's the thing. In terms of our clients and the typical long-term buy and hold investors, that doesn't matter very much. Why? Well, because the properties those builders are delivering they tend to be more expensive properties. Builders can't make money selling cheap entry-level homes, so they don't build them. In fact, they haven't really built them in 14 years. So just show me builders building $250,000 to $300,000 homes, and there's like hardly any of them, right? Most of these properties that builders are delivering are more expensive. They're $600,000, $700,000, and they don't make sense as long-term rental properties anyway. So that's not really an issue for the long-term buy and hold investor, because the long-term buy and hold investor wants to buy entry-level housing, and that's not to any great degree builder inventory. I mean, there's a little bit of it, and we sell it to our clients. We have that type of inventory in our network through the Empowered Investor Network. But overall, in the broad market, there's very, very little builder inventory in those low price ranges.